Well, Morgan Stanley has come out with a very detailed note on the entire cement pack. They're extremely constructive as far as the cement space is concerned. And remember, cement companies in the last 2 to 3 quarters have positively surprised the street when it comes to earnings, when it comes to volumes, and when it comes to pricing resilience as far as cement pricing is concerned. Now, what Morgan Stanley is saying in its note to its clients today is that they're estimating the upgrade cycle as far as cement names are concerned to continue on improving volume and pricing trends. So now what they're saying is that cement volume trends continue to surprise them positively. A double-digit growth in October is what they are witnessing. The pricing correction that was witnessed in September has now started to reverse selectively, unlike in past years where the price cuts tended to continue going into the end of the year as well. Now what they're saying is that cement stock outperformance versus the benchmark index has generally been closely linked to the estimate upgrade cycle, and they believe that this particular trend is all set to continue. So what they're saying is that they've reiterated their attractive industry view. They believe that some of the trends that further increase their conviction include a broad-based recovery, and it is no longer just a pent-up demand that cement companies are seeing that is leading to increased offtake, but also a certain amount of green shoot recovery. What they are saying is that while volume momentum as per their own dealer checks indicate that momentum has been improving on a month-on-month basis, and also across business segments, both retail as well as institutional, as well as all across the geographies. Now, what they're saying is that they're estimating industry demand to decline just 5% to 7% on a year-on-year basis versus 10% previously. Now, what they are saying is that they are actually assuming a 2-year industry demand CAGR of 3%, and for the coverage there, they're saying that a significant amount of volume CAGR recovery is something that they are saying. Now, what they are saying in terms of how they are positioned versus the rest of the analyst cycle, what they are saying is that they are 8 to 16% ahead of consensus and expect consensus earnings estimates to continue to rise, driven by both revenue as well as cost beats. They've gone ahead and they have raised their estimates across the entire pack. They are going ahead and increasing target prices for Ambuja Cement, ACC, Ultratech Cement, Shree Cement, Grasim, as well as Dalmia Bharat. So they're constructive with a buy stance across the entire cement space, and they've gone ahead and increased their target prices. Now, in terms of the order of preference, the order of preference for them is Ultratech Cement, the largest player. After that comes, they're talking about Ambuja Cement, and then after that they're talking about Shree Cement. They like Shree better volume growth than the industry as well as resilient not pricings. They are on the sidelines as far as ACC is concerned, and the relative underweight as far as Dalmia is concerned, given the fact that they're less constructive on South as well as East pricing.